can be deducted?
Yeah, we'll talk about that. This is called business deduction. When we talk about deduction, the Schedule A deduction is called personal itemized deduction. The major item for Schedule A deduction, number one, that is your property tax. But for those people, you must own property. If you don't own real property, you don't pay real property tax, you don't take benefit from that. And number two, you have mortgage. If you pay mortgage under total $1 million loan amount, you fully deduct your mortgage interest. All right. And other than that, you deduct your donation. Donation could be a big portion. If we can do very good tax planning, you set up your family foundation. You just shift your money from the left pocket to the right pocket. Then you deduct it. Even though legally speaking, that money is not yours anymore, but you control.
Yeah,
you still control that.
That's what I was talking about.
Yeah, you can control that. So we'll talk about this. Yeah, so I will go to your concern. Other than Schedule A personal deduction, and how can we do the tax planning for your business deduction? And the purpose is to reduce, just as Mariano just mentioned, how can we reduce the profit? Because right now you recognize $20,000 profit. Can we legitimately reduce to like 150,000? Let's see. Can we do that? Let's see. We will see that. This is called Schedule C deduction.
So, for example, if someone wants to do an international rental or leasing office, and in another country, how does the report the expense? And
you mean the office is overseas?
the office is still here,
Office
but
here.
the business is actually not done in US. When
Okay.
you open an US account, but actually your business is done overseas.
If the expenses is overseas, really depends. If that is more like a traveling, you still can report deduct in the United States, no problem. However, if you conduct your business in the United States, you rent one office in Shanghai. I need to do the research. I say fundamentally you still can deduct that portion here, but you only can deduct one time because the making more complicated. If you report the tax in Shanghai, you deduct there already, you cannot deduct here again. So do I answer your questions?
Not exactly.
Okay.
Perhaps let's say if I buy a house in Taiwan, then
Taiwan, okay.
yeah, I use it. The expenditure and there's a payment I have to pay,
Okay.
the mortgage, and also I rent it to someone else,
Okay.
and I also have an income.
Mm.
So in that portion, typically in that case, you will have negative income
Mm-hmm.
overall.
Yeah.
But you found yourself to make your
Yeah.
company as a break even.
Yeah.
Does it work in this way?
I need to verify. Is your business model is a rental business model?
Yeah. So
Right.
just for example.
I will say, for that scenario, it is not good for you to run business in the United States. You don't want to identify your business is a United States business. I will recommend you identify that business is foreign local business. Do not relate it to here. Otherwise, you're subject to double tax. You need to pay. You need to report one time in the United States, and you need to report one time in the local. So it's not good for you.
Local. Or
So if that is really your business model, you just treat that business as a totally local business, not related to the United States. You don't want to mention that. You just create a local corporation or do whatever. You identify that type of business as a totally foreign business. Don't relate it to United States.
but you mentioned the name is the same. Once the corporation has the same name, basically, for example, like Taiwan government, they don't know this is a
They don't care.
corporation.
They don't care.
They don't
Because
know
you-
this is a corporation. operation. They even take this as your net.
Right.
So in that case, actually, U.S. take this as your expenditure and your. I mean, this is your income
Right.
expenditure.
But my analysis is you want to deduct in the United States. Your purpose is to deduct that loss in the United States, but you create more complicated
Yeah.
and subject to two nation, two country tax regulation. So it's not wise. It's not beneficial. Yeah, Peter.
And you just mentioned the personal money can transfer to business account, and business account can transfer to the personal.
Let me stop a while. Okay, when I say transfer, usually we define that term more specifically. Okay, when personal transfer to business, usually we say there's a contribution. Contribution. You contribute. So in the future, you identify from personal, okay, to your business. We say you personally contribute certain amount of money to your business. When it's backward, from business to personal, we say this is a distribution. Distribute. Okay, your business funding the money back to your personal. However, when we say contribute or distribute, making sure this is not a loan, because from your personal to business or business to personal, it could be identified as a loan for some time, some purposes. So if no such purposes, you just transfer from your personal to a business, is not loan, just as an investment. As an investment, okay? You know the major difference is if you transfer the money from personal to business and it is investment, then there's no obligation for business to pay it back. No obligation. But if it is identified as a loan, then the business must pay back unless it totally dissolved. Okay. So once we identify this transfer is either contribution or backward as a distribution, or it's just simplified as simply as a loan, then we can discuss the following situation.
Is this only for the sole proprietorship or for all types?
It could be any kind. This kind from personal business could be as a sole proprietorship or partnership or corporation or LLC or non-profit. Non-profit is called donation, by the way. Okay, usually from your personal to your non-profit, there is no investment, and usually RS does not allow loan from personal to your non-profit or vice versa. So I would say it's applicable from 1 to 3. So what's your scenario? I want to hear your scenario.
I just thinking, like for small business company, like one person company, when you expense something, okay, you can say you declare this is for company expense, but actually probably if you don't transfer or not transfer or say contribute to the company yet, but then you spend something and say, okay, this is for the company expense, but actually your equity or say the assets, there's no such money, but later you say, okay, this expense say is for company. It's kind of no boundary between your personal and the company.
That is true, because this sole proprietorship, IRS is really not that rigid. Let me give you one example. Okay, I heard you already.
Yeah.
Okay, I just follow your example. Okay, in order to run your own business, I don't know what kind of business. Okay, say consultation. However, for this Thanksgiving season, you just go to buy a GoPro. You go buy a GoPro camera, okay, and you spend $300. Wow, for Black Friday. So you only spend $100. Okay, you bought a very good GoPro you like. Okay, and you know you're gonna use this for your personal. However, you just report this as your business expense. How? You don't transfer 100 cash to your business, instead of you spend on credit card, and you go out to Best Buy or whatsoever online, you get a GoPro. And on your bookkeeping, on the asset side, you say you have GoPro under the business. And nobody care. Nobody care. As long as your balance sheet or your bookkeeping may indicate on certain day your transfer or your contribute a GoPro value at $100, $300 value under the business, then it is there. And while you personal use it, this is it. That's part of life. And usually IRS, I would say, will not argue, but in the future, we'll have any chance, we'll talk about that. If IRS coming in to challenge, say, Peter, how can you prove this GoPro related to your business? Then you must answer to meet two standards. Number one, you must answer this camera is reasonable for my business. It's reasonable. And number two, necessary. We'll go one by one when we follow this schedule C. If you fail to do that, well, let me put it this way, should be very, very low standard to meet those two criteria. Number one, reasonable. Number two, necessary. But if you cannot prove either way, then IRS say, well, sorry about that, you cannot report this as your business expenses. So hopefully I answer your questions. I know your concern is the line is so blurred. You just mentioned there's no boundary. It seems like no boundary. Seems like no boundary, because for something, for some kind of equipment, you must install on your business side. That's very clear. So for example, if Mariano invests the sporting facility, and for certain equipment you must install on site, and I think there's no challenge at all. But what for the camera, you can use as a business. Say for example, I spend $1,000 for my camera, right? I can use this as my personal use. I can bring it with me to any tour. But I really prove I use this in my class, for example. Then I report this is reasonable, this is necessary, because I really rely on this to record it, and after that I post it on my YouTube and my student to watch that. I think it's very easy for me to meet. But if you running your engineer consultation and you go out to buy the GoPro, and GoPro is for outdoors, and that is not really related to your business, sometimes I say, well, is this really necessary, right? So do I answer your questions? It seems like no boundary, but if IRS want to challenge it, they can find the boundary. They can always find the boundary. So you just remember, okay, in order to meet the deductibility on the Schedule C, always keep this in your mind, whether or not these expenses is reasonable and necessary, whether or not.
I have a question for
Go ahead.
non-profit.
Yeah.
So a non-profit it's really not taxable, regardless. of
Okay,
having-
yes, okay, let me put this way, okay. Why do I put here? Usually non-profit is not for business, okay. However, who knows? You never know. Right now, more and more people would like to set the non-profit at the side. For example, our school, CalMat, we have a for-profit side, we have a non-profit side. So it's always good for you to think about this, okay? Unless your business is totally fail. Okay? Up until one point, one moment, when you see the light of hope there, when you see, the light is over there, over the the end of the tunnel, you see the light already. That really means you see there's a chance your business can generate the profit at that moment. You should consider to file non-profit organization. Try to reduce your taxable income. As I say, legally you can switch. Okay, you can switch the money on your left pocket to your right pocket. Even though legally speaking, once you transfer money to non-profit, it is not your money anymore, which is true, 100% true. However, you are the person controlling it. Instead of giving the money to IRS, which totally beyond your control. But right now, the money is still under your control. Why not?
How can you use it?
I will talk about that later on. At this moment, I just give you the concept. I just give the concept. Okay. 501c3, basically it means you receive the number. Okay, issued by IRS that this organization is tax exempt. By that mean each money this non-profit organization generate is income tax free, no income tax. So compared to 35%, you save a lot. You can use this 35% to hire more people, to do more R&D, for example, right? Number two, wait, hold on your questions. Number two, not only that, double benefit. When people donate the money into your 501c3, that people is called donor, may deduct from their income, for example, yourself. When you transfer the money from your left pocket to right pocket, money is still under your control, but reduce your taxable income. That's the main purpose, and not limited to you. That is open to everybody. Everybody donate money to your 501c3 organization. That person qualified to do his or her tax deduction. Double benefit. So, go ahead.
So for donation, you can donate anything?
The better off you donate the stock. So for example, for those of you sitting here, you receive your stock option from your company. So for example, your basis is $10, and right now the market value is $100. If you go out to sell it, you have $90 capital gain. And right now we're talking about almost one quarter. So for $90, you pay almost $20 to the state or to the government. So instead of liquidate, you don't liquidate by yourself. You donate to 501c3, and your deduction is not $10. Your deduction is market value. So you deduct $90 from your regular income. You reduce your taxable income. Then, once your 501c3 receive it, liquidate it right away. So your 501c3 receive $90 tax-free. Tax-free.
Then
You
how do
of course you
use
want to
it?
do that.
How do you use the money?
Go ahead. We'll talk about that. We'll talk about that. Okay.
That's the beauty.
However,
Uh,
the whole purpose of 501c3 is not to escape tax. Okay, remember, keep this in your mind. You cannot abuse. You cannot do the fraudulent. Okay, once the money comes into the 501c3, the expenditure of 501c3 become very, very limited. You can use the money in the funds on the 501c3 to do, number one, charitable. Number two, if you don't want to do charitable, then you do investment. You can do it. So you can use 501c3 to trade the market, the stock, do whatever you want. To do trading the future, foreign currency, precious, metal, gold, whatever you want. However, the bottom line is you cannot use the money under 501c3 for your personal. You cannot buy the very luxury car, plane, yacht. you can buy it, but you cannot use it as a personal. All right. So that's the bottom line. I think the bottom line is reasonable enough. You can use the money whatever really related to charitable. It's not that difficult. You know, we heard about this, you know, the disaster every day, the disaster, the natural disaster every day. You use this money to do something good, right? You donate to the school, you donate to do some R&D. Why not? It's better off than you leave the money to IRS, right? Even though expenditure is kind of limited, but I think that limitation is very reasonable. I think the bottom line is you just don't abuse the funds under the 501c3 for your personal benefit. This is it. Good enough. You donate to university, you know what? It is very, very low for those people, for those schools receive your donation and give the admission for your kids. It's totally legal. In the United States, that's totally legal. You donate $5 million to Harvard and your kids got admitted. It's not like exchange, but that is legal. That's totally lawful, right? So I think the bottom line, you just don't use 501c3 to purchase something very luxury and for your personal benefit, and that's good enough.
So then if let's say if I have this no benefit,
No personal benefit, I would put it this way.
no
Because
profit.
you are using public fund, because the money is supposed to go to IRS, right? So I think this is reasonable
So
enough.
then if I buy a luxury car, let's say I buy a luxury car, the main purpose is try to serve a community.
That's fine.
Then occasionally I need to drive, go to my
No, there's no
grocery
occasion.
shop. There's no occasion.
No occasion. Yeah. I don't recommend any occasion. I would say you can buy whatever luxury you want, but just for public benefit. But the hard part is how can you convince IRS the luxury item is benefit for the public, not for you, for yourself. You know, that's very tough to convince.
They see it, it's.
Right. So I think the bottom line is just don't abuse it. I think this is a very beauty. You know, this is the beauty of the 501c3. I think the whole purposes of taxation is try to encourage the rich people to do something good. I think at some point you already enjoy enough already, and you don't need one more, you know, very luxury plane or ship or car anymore in your life anymore. You know, you're beyond your lifestyle totally beyond that already. So I would say highly recommend, you know, consider 501c3. You know, especially the standard is not very high. Once your family is double income, engineering income, and you recognize 400,000, $500,000 gross income every year, you should consider. You know, there's no requirement how much money you need to put in. You can put in zero. To maintain 501c3, you don't have to maintain too much money. You just, as your wish, whatever you feel comfortable, you want to donate it. The bottom line is you just don't abuse. Just don't abuse. Once the money donate, put it in, don't get it out for your personal benefit. That's it. Yeah. Okay, let's go the item on the Schedule C. Remember, okay, the Schedule C, the whole purpose is to reduce your business taxable income. We want to reduce it. And think about this, you have no such chance for your salary. Double income, this is the fix. You know, when you receive the number on your W-2, you have to report it. You know, if there's any mismatch, you will receive the notice from IRS automatically, and you'll get a penalty. But for this, it's very, very. I would say you have a lot of room. I don't want to say manipulate, okay, Manipulate is not the right or correct word to describe it. But you have a lot of room to do the tax planning. So before you run your business, you think about that. What kind of business related expenses may generate. Okay. So this is Schedule C. How many of you report Schedule C? How many? One? Just one? Okay, I will highly recommend you use it. You use it in the future, okay? Especially for those people you are relying on majorly on your W-2 income. For those people, okay, your income is majorly from W-2, highly recommend you think about any way to create your side job. And the main purpose is hopefully increase your income, but at least, okay, you can deduct some business related expenses. It's not deductible on your salary income, but it may deductible on your business income.
Is the Schedule C also for personal purpose? Or is it
Schedule C is only for personal.
That's-
No, I may be wrong. When you say personal, what do you mean personal? Give me an example.
I don't have a business, but I think I filed Schedule C in my tax before.
That's impossible because you must have business income. Otherwise, you cannot file. If you're lucky, it did not be picked up by the IRS. That's fine. Otherwise, something must be wrong. The requirement to file Schedule C, okay? The requirement, or say how can you? What's the qualification, right? You must have business income. You must. If this is zero income, you cannot file this. So here is, okay, number 1, part 1 income. If you have 0 here, you cannot report part 2. See here? So for those people, you just start out your business. For the first year, unluckily, you have 0 income. But you spend thousands money to start out your company. Sorry about that, you cannot deduct it. And you can keep those as a initial setup fee, and you may be qualified to deduct it over 5 years period, but not in 1 year. Okay, so only qualification for Schedule C is you must have some dollar amount here, from number 1 to number 6. You must have something. So number 1, you receive something from credit card. Number 2, 1A from credit card, B from sales, C certain amount from W-2. This is very special, okay? Say for example, for the life insurance agent, they receive their compensation from insurance company. By law, they are independent contractor. They can deduct their business related expenses. However, they are defined as statutory employee. So it's very special created by the tax law. So those people, even they receive W-2, however, they can deduct business related expenses. So you have a 1D here, okay? So you must have something here. So for example, if I'm a lawyer and I doing my business as a sole proprietorship, I can file this. And another very well-known example, this is a real estate agent. If you are the real estate agent or loan agent, and you receive the commission whatsoever under the number 1, and you can create the following expenses. So any questions so far? Yeah, Peter, so you.
I use a TurboTax for my tax, and I'm not sure if I use Schedule C. I remember I saw that because I had a rental property before.
Rental property, okay.
So
Rental property
is that-
should be on Schedule E, so
It's not C.
shouldn't be C. Okay, but let me put it this way, okay. Okay, let me put it this way. If you are real estate agent, you can report your rental income on Schedule C. But if you're not, then you report your rental income on Schedule E.
So you mean the personal, is it not company or also proprietorship?
This is only for sole proprietorship.
Oh.
Schedule C is not for corporation. If you're a corporation, you have another tax form to report. And Schedule C is designed only for sole proprietorship. So don't miss out. Okay, if you are running your business under any other different type business, you don't use Schedule C. Schedule C just for you. Even okay, for the very special case, you and your spouse running individual business, each of you report different Schedule C. So this is very unique. If you and your spouse running both as a business, you don't report Schedule C. You report either as a partnership or report as LLC. It's different form to report. Oh, by the way, if you running different business line, for each business line you report one Schedule C. It's that strict. So for example, I'm running my law firm, that's one Schedule C. And also I'm running my real estate brokerage, that's one Schedule C. And if I'm running my Hamilton school, that's another Schedule C. I cannot report that altogether on one form. So do I answer your questions? Yeah. Okay. All fine, James? All fine? Okay, let's see what kind of expenses we can report, okay? And the big one is advertising. So think about that, okay? In order to reduce your business taxable income, consider spend your money on advertising. And it is worth it. Okay, even though this class is not talking about marketing, but you know, my personal experience is you put money on advertising is a lot worth it. Okay. There are two type of expenses I think is worth it. One is R&D, the other one is advertising. Because those two type expenditure will bring in the multiple return. Think about this, if you can spend $1, then you get $3 return, why not? You do more, you receive more, right? Of course, the trick point is how can you put money into the advertising more effectively? Sometimes just waste money because you know that advertising does not subject to your appealing to the right audience, not the right customer, or not the right channel. But as long as you find out, you know, the good channel, connect your business to your potential client or customer, put in the money in, worth it. And there's no limit. There's no dollar amount limit for the advertising. So I think, you know, consider that's number one. Number two, number 8, advertising. Number 9, your car or truck expenses. But this is more complicated. Okay. Usually, for those people filing Schedule C, I may recommend they consult with tax professional. And because if you filed the wrong number, IRS will not let you go. Okay. So there's headache. Number 10, commission. So for sole proprietorship, usually you don't hire employee. Usually, not necessary. Usually you just hire the independent contractor. And the reason why is you don't pay their health insurance, right? And you don't do any employment tax. You don't pay their social security, such thing. You just pay one number, that's commission. If you pay commission out, then don't forget you need to provide 1099 to that person. Okay. 11, contract labor. very similar to 10. 12, depletion, very, very rare. Okay, very, very rare. Number 13, depreciation. This is a big item. Usually, for the small business, okay, for small business, we can report your expenses all in one time under section 179. For example, go back to Peter's example. Your business, for your business, you go out to buy the GoPro. You spend $300, $400. You don't have to follow our depreciation. You just write it off in one time. You just report this 400, 300 in one time. That is because your business is qualified as a small business, and then you can write off certain amount of money in one time in 1 year. Okay. Anything beyond that, anything beyond the limit of 179, then subject to depreciation, and that's headache.
What is the cap 179? Like the limit?
Which item? You just mentioned
including the depreciation. I mean, your expenses.
Yeah, there are two limitations. Okay, one is the annual sales. Annual sales, I need to check the number. That number change every year.
Okay.
My impression is around $2 million, around that range. Your gross sales under that limit is very high, $2 or $3 million every year gross revenue. Number two, you don't deduct more than certain amount. My impression is around 150. So do you follow my number? So there are two numbers. You need to meet both, okay? Number one, your business is a small type business. They have definition, annual gross sales under certain amount. My impression is around $2 million range. That's a lot of money. Okay? So if your monthly sales is like only 100 something, under 200, I think you're qualified. Okay? And number two, you do not deduct in 1 year more than a certain amount. My impression is you do not deduct more than 150,000 in 1 year. Then that's why. And if you are not qualified for those two qualifications, then you report under 13 depreciation. And again, usually we cannot do that. You need to find out the tax professional, help you to do that.
So even if I buy a computer,
No problem.
it costs me $1,500.
Write out, you
You
write
still
out.
write it one time.
Yeah, yeah. Few items are exceptions. Few items, even you qualify those two criteria, few items are not included. Number one, automobile.
Yeah, that's what.
You cannot write out automobile in 1 year. Okay.
To proceed
Yeah,
like 5
you
years.
must you must do that in 5 years or 3 years, depends.
So if I
But for computer, that's fine.
if I do lease, I can just deduct.
Yeah, if you do this, you can deduct 100%. Yeah. Well, I shouldn't say 100%, but more likely you can do 100%, because IRS provide a very, very complicated table. So if you pay lease beyond certain amount, you can only deduct under the limit. But if you meet the criteria, likely you deduct 100% whatever you pay for the lease. So for business people, they prefer lease than purchase. That's one reason. Number 14, employee benefit, usually you don't provide it, okay. Oh, 15, this big one. Insurance, but other than health. 15, this big one, okay. Usually, in order to run your business, don't forget the liability insurance. For your personal health, you don't deduct here. You deduct on the 1040 under the adjustment. That's big portion. So for self-employee person, for the people you are self-employee and no any other employer cover your health insurance, medical insurance, whatever you pay, you can deduct, you can do the deduction, but not here, under 1040. Any questions? Sorry about that.
1040, you said?
1040, you deduct your self-employee medical or health insurance under 1040 page 1 adjustment. And there's no limit. Whatever you pay, you deduct. Right now for self-employee family, the number cover the whole family. The number running from $500 to almost $1,000 for a month. It's not cheap. Just cover insurance.
The health insurance.
Yeah, it's almost like you rent apartment. Yeah, almost like the expensive rent apartment. Almost like that. Yeah, it's not cheap.
It's going higher next
Yeah,
year,
it's even higher for next year.
right?
Yeah,
You don't want to care?
yeah, Obamacare is even higher. People say it's a 50% increase.
Yeah.
Yeah, 50%.
Yes, well, yeah.
But the good thing is, it's deductible for, for self-employee people. They like to see something deductible. That's the main thing. Okay.
The things you have to make the money before you can deduct.
Wow, that's the whole bottom line. If your business cannot generate profit, after a few years, you just quit it.
It's a hobby, right?
You just quit. Because the whole purpose of this class, entrepreneurship, is we try to help our student, to identify some business you can generate profit. Right? Eventually, when others come in to argue, say, is this your truly business or just your hobby? What's so many fun for you to lose money? Is this just your hobby? Right? Because if this is a hobby, you don't care. Right? Say, for example, go out for camping is my hobby. I don't mind. I spend the money on the equipment because my purpose is not to generate the income at all. So if your business keep on losing money, the IS come in and say, oh, no, this is not your business. That's your personal hobby. If it is identified as a hobby, you can no more using Schedule C.
Yeah, I think that's another great line.
Yeah,
Hobby
of course,
business.
of course. Of course. So from your side, right, you are trying very hard. You are argue so hard, say, this is business. I put so much effort there. This is my business, so legitimately, I'm allowed to deduct expenses. But the IRS say, wait a minute. If this is your truly business, how come you cannot generate profit for so many years and you are still so into it? What is your motivation, right? Even though you argue it's business, but keep on losing money, still into it. I said, no, this is a hobby, because you filed a fund on losing money. You're satisfied already. So even though you argue it's business, but wow, it's truly your hobby. So try to avoid that. Okay, try to avoid that.
Just to put another scenario, like you said, people who had a W-2 income and they pay taxes, they wanted to pay all the taxes.
They can't
And you
escape.
recommend you to do something on the side to write off
Yes.
some of the.
Hopefully.
So, for example, in my case, my wife is working. I'm not working. Probably I'm gonna start working as
Yes.
an
Yes.
entrepreneur.
Yes. Yes.
So, yeah, I'm not generating income the first,
3 years
Years.
is fine.
but she covered some of the expenses
Yes.
of the
Yes.
household. So that's not a
Totally
problem.
okay.
Okay.
Eventually, there's one type of very ideal combination. For family, one spouse receive W-2, the other spouse try to run own business. And for the first few years, the spouse receive income may fund the money to the business and see the deduction benefit from the losing money business for a few years, by the way.
Okay,
Yeah, for
it's not
few years.
fair.
That makes sense because you need money to run business anyway, right? So if for the first few years the business generate the loss, then of course, reasonable, it is allowable to deduct the money, invest for the business, of course.
So in this case, the first year business, let's say you don't make money, there's no profit at all. Then, but if somebody do a donation, would that?
Oh, wait, hold it. Donation. You need to be careful of this word. You cannot donation to the business.
Oh, yeah, contribution.
Contribution. Yes. Yes. That's what I thought. Yes, contribution. Yeah, right. It makes sense. Okay. Somebody makes contribution. They cannot be somebody. They must be you. So go back to this concept because we are only talking about sole proprietorship. So you are only one person can contribute the money to a business. No any other.
So if I make a contribution to the business, is that contribution becomes taxable?
No.
As a part of
No, there is no tax effect, just purely for contribution. So for example, you are the person running your side job and you transfer $1,000 from your personal account to your business account. For this transfer, no any tax effect, not at all. Only until the moment by the end of the year, you calculate how much loss generate from this business and you post that negative number to the first page of your personal 1040. So that negative number bring down the total gross income at the bottom.
So the negative number has to come from here.
Yes, the negative number is on the bottom of this form, Schedule C.
But there is no income, the zero.
No.
Can I do it?
No, because when you business receive $1,000, that $1,000 is not income. The income must be receiving from anybody else, not from you. So when you transfer 1,000 from personal to business on Schedule C, that is not 1,000 income. There's no income yet.
I know. But at this point, if you don't have a business income,
You cannot.
well, you cannot use it.
You cannot use it. Yeah, you cannot use it. So you must generate certain income from somebody else, say $5, from your daughter, from your boy. I'm joking. Okay, you must receive the income in order to report the loss. Yeah. Otherwise, the whole thing is not legitimate. Okay, we are running over the time very quickly. So I think you can read through this whole item from number A to number 27. The beauty of number 7 is the other expenses. Other. Anything not included from number A